Welcome to Moments in Credit Union History, sponsored by CUNA Mutual Group. Today, I'm pleased to welcome to the show Carroll Beach. Carroll Beach retired as the CEO of Co-op Shared Branching Services. Prior to that, he had served as the CEO of the Colorado Credit Union League for over 30 years. During his tenure with the credit union movement, Carroll has served in many national committees, working with both CUNA Mutual and CUNA on their boards of director and advisory boards. He is the recipient of the Herb Wegner Lifetime Achievement Award, as well as the AccuEagle Eagle Award. Welcome, Carroll.
Thank you.
How are you?
I'm good, thank you. How are you?
Good. I have in front of me your bio, which is a laundry list of credit union accolades and accomplishments. And I know that you have had a long career in the credit union movement. And some of that time was spent with World Council and CUNA and doing some work overseas. And I know that that's something that you're passionate about and would like to share with us. So the floor is yours today, Carroll.
Well, thank you, Stephanie. Appreciate it. Let me start out by reflecting on my history a little bit. Some of my friends actually think I was there in 1934, but I really wasn't. Anyway, I was able to get into the credit union movement, I think, primarily because of being fortunate. I started out as a teacher, and I was asked to be on the board of a credit union, and I had never heard of a credit union, and so I was taken out for a cup of coffee before the annual meeting of this little credit union, and they told me what was going to happen, and I went to the annual meeting and was elected. And the person that did that at the time was Jim Brinker, who was treasurer of the credit union. He got a job with another credit union in Kansas. So at that point in time, they asked my wife and I if we would keep the books of the credit union at home, and we did that. And again, it was a teacher credit union. We expanded a little bit, and fortunately, about a year later, after I did that, I was called by the Kansas Credit Union League representative, and they said, we think you would do a good job as a league person. So I interviewed for the position at the Kansas Credit Union League. And just as a side note, we were interviewing, I think it was around October, and I was teaching school and we had student teachers. And so after the interview was over, they asked me if I would be willing to come to work in November. That was October. And I indicated that I could not because I was under contract. And they said, well, you could break that. And I said, yes, but that's not me. So as I learned later on, Dennis Hoffs, who recommended me for that job. Dennis is such a great individual person and believes strongly in the credit union movement. As they were leaving town, I understand he asked Jim Jukes, who was president of the league at that time, if he thought I'd come to work for them. And he said, I think he will, but if he comes before May, I'd be very much surprised. So a couple of months later, they called and said I had the job, and they would wait for me. So I say all that just simply to say that I was involved in the credit union movement and really believed in it because it was certainly a people type organization, and it was an organization that had owners, and it was interested in providing not just an alternative to the banking system, but rather than that, it was an organization that could get people involved. And I think that in the members of credit unions really appreciate that. Even when credit unions get large, I'm on the board of Elevations now. We have like 145,000 members or something like that. So it's more difficult to have everyone at an annual meeting, but they have the opportunity to vote probably more in depth than probably what we did at the time. So anyway, after I started working for the league, I did some educational efforts, did a lot of lobbying for them. We worked on a lot of projects. The Kansas League was a very, very progressive league at the time. Many things happened there. Jim Jukes, who was just a dynamic individual and had a lot of great ideas on how to make the credit union movement prosper even more. Just as an example, we were the first league to buy a bank. We actually bought a bank in 1968, I think it was. And the reason we did that was because in those days, credit unions could not have checking accounts banks would not allow credit unions to be involved in the checking business. And so we bought a bank and started something called Expandacheck so that we could clear everything through that bank. It was a tiny bank, but it worked well for the people at the time. So we started the Expandacheck, which was kind of a share draft. And that's before credit unions had the authority to have checking accounts, as it were. So we had the bank, and the sort of a sidelight on that is that I remember, I think I was making maybe like, I don't know, 12 or 13,000 a year at the time. And Jim Jukes came to the management meeting that day and said, hey, we're going to buy this bank and we need each of you to sign a note because it has to be done individually. And so I remember going home that evening and telling my wife that I'd signed a note for $76,000. And she said, what, why? And so anyway, I explained that. And Kansas Central Credit Union, the corporate credit union, actually paid us back later on after we got the bank in the holding company. So that was just sort of one example. And you probably are aware that at that time, credit unions not only did not have checking accounts, they weren't insured by NCUA at the time. I think that occurred in 1970. So and there was a lot of resistance to being insured by the National Credit Administration or by the federal government. And I think the reason for that was that credit unions wanted to be more independent, and they didn't want to have a lot of regulation. And a lot of the regulation we have now comes from the fact that we are insured, and they want to make sure that the insurance fund is protected. So we had organizations, stabilization funds, and that credit unions were contributing to. And if a credit union had a challenge, we would lend them money or go in and help restore the credit union to its health with those organizations. So there were some changes that occurred along in the late 60s because of the Uniform Consumer Credit Code, the Uniform Commercial Code. All of those were changing and making more and more regulations. And then in 1970, the movement decided that they should be insured by the federal government. One of the interesting things about that, and just my thought, in those days, if a new member came in and said, or a new potential member said, is the credit union safe? We would go through the process of explaining to them, yes, it's safe. We have the stabilization fund. We have strong reserves. We have credit committee elected by the members. We have a supervisory committee. We have all these things that make the ownership of a credit union very, very safe. And so once that we got share insurance, a member comes in and says, potential member comes in and says, is the credit union safe? Sure, we're insured by NCUA. And the explanation isn't given as to what a credit union is many times, I think. So I guess fast forward to 1973, after a lot of experiences at the Kansas League with corporates and legislation and education and the Service Corporation, I applied for the position in Colorado. And in those days, they were called managing directors rather than presidents. But I was hired by the Colorado League in 1973. And interestingly enough, their legislative activity had not been very great, and the law was pretty restrictive. And they would even ask the banks before they introduced a bill. Well, we were able to change that through a good management team, I think, and a great lobbyist that we had, John Sheehy, on our staff, and we were able to get a very favorable field of membership passed. Colorado could allow multiple seg groups, small employee groups, select employee groups. And we were able to do that, I think, with the idea of how important co-ops are to the working relationship that individuals would have together. So my career for 29 and a half years was at the Colorado Credit Union League, where we were able to at one time manage the corporate credit union and the service corporation and several other corporations that we initiated to provide for income. And so the league became pretty well off financially for a small league. And it's a very interesting how the credit unions developed in those days in working with the league to provide services. Our thought was we need to provide services to the large credit unions, and that will also help the smaller credit unions. And I think when I came to Colorado, we had 347 credit unions, and now I think they have 80. So I'm not sure
which direction they're going in.
The assets and membership has increased a tremendous amount. And interesting enough, Mandy Helly, who was former chairman of CUNA as well, was chairman of the league in Colorado when I was interviewed and when I was hired. And Mandy was president, CEO of University of Colorado Federal Credit Union. And so what's interesting a little bit about my career is that after I retired from the league, I was asked to manage the Credit Union Service Corporation in Atlanta. And it was supposed to last 6 months. It lasted 8.5 years. So I have trouble retiring, I guess. They were just a great organization. They did a tremendous job. And then we merged with Co-op, thanks to Stan Holland and other individuals that were involved in it, Chris Meekum and others. We felt like it was important for us to have a broader footprint than we had just with the one item. And the Co-op gave that to us. So we had a really good relationship with the Co-op at the time, and continue to do so until I think recently that has changed a little bit. But they still offer shared branching, and at the time CUSC had their own. We had our own technical expertise. We had the data processing. We had the system that allowed all of the shared services to occur. And you're probably aware the shared branching is the way it works is that if you're a member of one credit union, you can use the services of another credit union as long as that credit union is a member of the network.
Shared branching is literally my favorite benefit of being a credit union member.
Well, that's
I love shared branching.
I've heard people say that because they can still use the one back home.
Right, exactly.
I think that's I think the reason that's necessary in the United States is because we have credit unions on different data processors. Mm-hmm. And what I've been told and what I've seen in like Quebec, Canada, for example, they're all on the same data processing company, so they can do that very easily. But in our case, it was a way to provide interstate branching in a way. In that if you were a member of a credit union in Colorado, say University of Colorado Credit Union, you could be a member of another credit union in I don't know, San Antonio, Texas, or whatever.
Right.
And so that worked out really well, and the people I think enjoyed it a lot. There's more and more technical expertise available now, even I think, and so credit unions are obviously trying to be more digital in their efforts. And again, I mentioned that I'm on the board of Elevation Credit Union, which used to be the University of Colorado Federal Credit Union. Mm-hmm. And Elevation serves like I think 6 or 7 counties in the state. We have 145,000 members. And frankly, the credit union management does a great job in perpetuating the credit union ideal too. We talk about members and ownership and all that sort of thing. And I have to say that in my experience, I really haven't ever talked to anyone that once they become a credit union member did not believe in the credit union idea. They always thought that was a good idea. So
absolutely,
we have grown, I think because of that. And of course, the fields of membership now are pretty wide. If you want to expand, you can usually do that. And I think it was back in the day, there were many, many restrictions, and there weren't even In some cases, they did not allow any members of the family to be a member of the credit union. You had to be very specific on your common bond. And I remember in Kansas, first starting there in '66, I guess, one of our jobs was to go out and organize credit unions. And we would do that. If you found 100 people, you'd organize it,
Mm-hmm.
And of course, today that's just totally not very practical because you need to be on data processing. You need to have some capital base. And I think that's a vast change in credit unions. There used to be 20, seems like when I started in the credit union movement, as I recall, there were 23,700 credit unions. So now we have what, a little over 500, 5,000. I mean.
5,000, right?
Yeah. So I've really enjoyed the credit union movement. I've certainly had the opportunity to participate at all levels. The World Council was one of my very favorite organizations because I think it not only assisted in the development of countries where they needed lending and saving, but it also had a philosophical bent to it that I think would indicate that it's different. The credit movement is different than other organizations, and I kind of always considered that the missionary arm of the credit union movement, in that they were. We would go to other countries and try to organize credit unions and make them more developed than they were. And I think that's a great attribute. Also be involved in CUNA, a great organization, and had the opportunity to go through a whole bunch of committees and discover how all that worked. Obviously, there's been changes over the years, which I think in most cases, and maybe all cases, has been good for the movement. We've certainly grown a lot in the last several years. So the experiences I've had are, I don't know, maybe to a certain extent providential in that seems like every position I've had is because someone knew me and they knew someone else and recommended me or something of that nature. And I think that the relationship building is something that's still extremely important in the credit union movement.
Absolutely. I often say that the credit union movement is very much like a very big family. And that's, certainly when we used to go to these conferences, it was like Old Home Day, which we have here in New England. And you see those people that have had such an impact on your career that you don't see every day. So certainly we're looking at new ways to do that. I see that retirement isn't necessarily a quiet time for you. I do see from your bio that you have recently been named the Credit Union Times Volunteer of the Year. So apparently you're not quietly going into retirement, Carroll.
Well, it's good to have a position or a job where you don't have a problem going to work.
Absolutely.
I have to say that I'm sure there might be an exception or two, but I can't remember a time that I didn't want to go to work, in the credit union.
Sure.
And, I think that is characteristic of some of the bank executives that we've hired. Even at Elevation, for example, we have people with careers other than in the credit union movement, and they began to catch on to that philosophy, and they like it a lot better than they did working at the bank because they feel like they're doing something for the members as opposed to constantly looking at how much dividend we can pay to the stockholders. So it's
absolutely
it's something that really catches on to people, I think, and they enjoy that.
Yeah, we always hear people helping people, but at the very core, it's exactly why people join this movement and stay in this movement. So thank you for joining us today. It was wonderful to hear a little bit of your credit union story. This has been another episode of Moments in Credit Union History, sponsored by CUNA Mutual Group. Thanks, Carroll.